The check-in today, we don't have a theme. It's just going to be a general check-in, and we're going to take community questions. So let me just give a brief overview about what Sperax does before we get into the questions part and also the updates, since there might be some newcomers. So basically, we focus on building DeFi products with access across L1 and L2 blockchains. With the Sperax token, governance token, SPA at its core, we built the first auto-yield stablecoin on layer 2. It's called USDs. And we're launched in early 2020. It's headquartered in NYC. And in December 2021, we released our stablecoin, auto-yield stablecoin on Arbitrum Layer 2. Resigning on chain, USDS is backed by collateral and algorithmically by the protocol's ability to mint $1 worth of SPA when redeeming $1 worth of USDS. So that is how USDS combines the scalability benefits of algorithmic stablecoins with the stability benefits of collateralized stablecoins. That is how the mechanism behind a stablecoin. When it comes to the user's perspectives, the USDS holders can benefit from native auto yield, which means it's complete automatic. You don't need to understand the staking, the whatever. You just simply need to hold, and automatically you will earn yield without having to claim or stake or anything, because the yield is generated organically from the collateral deployed on external DeFi protocols like Curve Finance. And our roadmap is to construct a full stack DeFi ecosystem based on the USDS. The ecosystem is expected to expand through organic and partnership growth. And we're backed by Polychain Capital, Jump Trading, Alameda Research, Amber Group, and DJC Aoki. And more importantly, is that we recently just got listed on FTX. And yeah, that's the major update. I guess that is all for the profile and overview. I think we can start with some major partnership updates. Alec, do we have anything good news to share with the community?
Yeah. A couple updates. So if you follow us on Twitter, you definitely saw the most recent Medium article. So we announced our most recent partnership with Transact. So what we're going to do is we're going to get a listing for USDS and SPA to allow for any DApp that has Transact integrated, including MetaMask and Trust Wallet. Users will be able to buy USDS, the auto yield stablecoin, with their bank account, with their credit card, with their debit card, and it has local payment options. So wherever you are in the world, you should be able to access USDS with that partnership. So we're super stoked on that. And, the market's been responding positively. So we had some USDS minting this last week. So we actually had an increase of 25%, which is massive. We're trying to continue to hit those double-digit weekly growth targets. So we had 5 million USDS printed since the last AMA, and that actually puts the total amount to 25 million circulating. And we have over $20 million generating yield in Curve. So it's collecting all the trading fees and all the CRV rewards, and then it's going to pass it along to anyone who's holding USDS in their wallet. And finally, we reached 10 million net SPA burn, which is absolutely massive. We were looking at the math, and roughly every $10 of USDS printed results in $1 of SPA being burned. So we're just absolutely ecstatic at the rate in which SPA is being burned, over 1% of the circulating supply now. So we're hoping to keep that up. And as everyone knows, the primary driver there is USDS growth. So that's the updates from my side.
Thank you, Alec. That is really thorough. How about the Econ side, Nicolas? Any update on the Vespa?
Yeah, so we will be releasing our governance model in the beginning of April. We're just finishing getting all of the code audited. There are a couple of excitement developments coming with our governance model. The most exciting one is that USDS growth will be directly linked to SPA value accrual, and this will happen via staking mechanism. Specifically, by staking your SPA, by making your SPA temporarily illiquid, by removing by making them non-transferable in the protocol, people will be able to claim a couple of different rewards. Specifically, new emissions will go directly to SPA stakers proportionally to how many SPA they have staked. And also all the minting and redeeming fees for USDS, as well as 50% of the yield generated by USDS collateral, will be used to buy back SPA from the open market on a weekly basis and give those SPA back to the SPA stakers in the form of rewards. So effectively, with the introduction of our governance mechanism, we will be starting a weekly process of buying back SPA from the open market using all the revenue generated by USDS. So as USDS grow, the more and more SPA we will be buying from the open market to subsidize staking rewards. Effectively, this has a big benefit that we're going to have a model where the vast majority of rewards won't be inflationary, but would be driven organically by market buybacks. And the more SPA you have, or the longer you stake your SPA, the more rewards you would be able to get. Finally, we would be launching with some delay our governance model, where these SPA stakers will be able to vote on whitelisting different collateral, as well as deploying different collateral strategies. Pretty excited about these developments. And yeah, next week we'll be able to discuss a bit more on that. But happy to answer any questions if anyone in the audience wants to know more.
Sounds good. Thank you, Nico. Ray, it's your time to update the community about our engineering progress.
Thanks, Frida. Yeah, so making a lot of good progress. We've been heads down working on the VSPA as Nico was talking about. So that is getting ready. We've already got the review from our auditors. So we've already incorporated some of the feedback. Well, the feedback that they've provided, it was pretty minor. And we're just trying to wrap it up with a bow, so it's ready to go by next week. So that's the main update on our side, just staying focused on that. After that, after the VSPA is launched, then we're going to go back to updating the farms. And then we are focusing also on the multi-chain solution, which Nico is helping us out as well both from the economics side of things, because we have to look at it from not only the technical aspect of it and the security, but we also need to look at it from the economics aspects from it. So that's a big update from our end on the engineering side. Thanks.
Thank you, Ray. We do have a flooding amount of questions from the community side, so let's get straight into it. First question is from Jimmy Boss. Why are you not setting up your own network, even though you're such a powerful project? Why can't we send, he probably meant SPA tokens directly to exchange over the Arbitrum network? Why is such a powerful project not so popular globally? And finally, why is the SPA token not available in the BSC network? Is there anyone who would like to take this one?
We definitely want to enable Arbitrum deposits and withdrawals, but apart from Ethereum, they're not being supported for any other cryptocurrency at the moment. It will take a little bit for exchanges to start incorporating the optimistic Layer 2 solutions into the network. So we rely on them to do that. The question is about why centralized exchanges do not allow withdrawals or deposits on Arbitrum. It's something we really want to do. We're pushing this and our partners to do that. Just keep in mind that apart from Ethereum, this feature is not available for any other cryptocurrency at the moment. So hopefully we will have it available soon, but it's something we don't directly control. And then I think the second part of the question was about the Binance Smart Chain.
Yes.
I think the Binance Smart Chain is a pretty centralized alternative. But personally, I wouldn't have a preference building there because of how centralized it really is. And if any of you is a developer, you know that they have pretty awful documentation when it comes to the code.
Okay, thank you. Next question. Predicting stablecoin regulation is at best speculative, but remains a potential headwind for projects such as Sperax. With having exposure to both centralized and decentralized stablecoins, how flexible is Sperax and what changes is the project willing to make if unfortunate overregulation were to come in the US? I think this is a really general question. It's a little bit abstract. We have to make our decisions, like potential decisions, case by case, depending on what kind of over-regulation you mentioned here would look like in exact form. So, yeah, that's my answer. Do you guys have anything else you would like to input?
Yeah, so he actually raised a really good point to how adaptable our stability mechanism is when it comes to changing our collateral, or if the value of our collateral drops, which for instance could be the case if some centralized stablecoins freeze DeFi related tokens. Like let's say USDC gets banned, it's banned in DeFi. In a scenario like that, it would be a short-term shock for a protocol. It would definitely be a stress test. But we designed our protocol with the idea of being able to adapt if market conditions change. So in a nutshell, what would happen is that probably the algorithmic component would have to take over for a little longer. But then as more minting and redemption happens over time, we're pretty sure that the protocol would be able to adapt and reach a collateral target that is desirable given new collateral options that will be added. So yeah, if the value of the collateral changes, our protocol is able to sustain that, it's able to stay solvent and allow swaps at any given point in time. So you can mint or redeem USDs for $1 worth of cryptos. What would change is that the composition would rely more on SPA and less on, let's say, Tether or USDC. That would be the impact. So yes, it would be a stressor. It would probably cause some SPA dilution, but it wouldn't affect the stability of USDS whatsoever.
Thank you. Next question. Looking down your roadmap, can you give some more info about this? I'm afraid this is really general. As we know, all depends on Bitcoin. If Bitcoin is down, most of the altcoins are dumped. So my question is how you handle this problem and what is your future plan to keep your coins strong?
So I'm happy to talk about that a little bit, and then if Nico and Alec want to cover that, that's great. So the way to make it strong or is to continue to be active and make new developments, right? So that's the plan, and not only just adding more developments to the project, but accelerating our pace of release of products and solutions and offerings that encourages the use of USDS. Along with that, building partnerships with other protocols is critical for us. Making sure that we can create some synergetic partnerships with other protocols so that they help promote the use of USDS, as well as us helping them promote their products as well. That's going to be really critical. And then the third piece is, so I talked about development, talked about partnerships, and why am I drawing a blank? There's a third piece to it. I'll pause here for a second, see if Nico and Alec want to jump in while I try to remember what the third piece I wanted to bring up.
Yeah, let me throw something in here. So I totally agree with those first two, and I think just to kind of bring the point home. So if the question was curious, or if it was targeted toward the governance token SPA, acknowledging that hey, if we're entering some sort of bear market, there's likely going to be some large sell-off. Something that's really important to understand is the value accrual mechanism. So, as people flee from risky assets and they want to save their money in stable coins, it'll actually likely produce more demand for our stablecoin, USDS. So as that circulating supply grows, it'll actually cause the governance token to burn. So it's a really creative mechanism that actually could potentially protect the governance token SPA from any sort of crypto winter, thanks to the SPA burn mechanism. So you can familiarize yourself more with that in our Medium posts, but it's definitely worth checking out.
Awesome. Sorry, Nico. I actually I remembered the third point that I was trying to make. So I mentioned, development, partnerships, and the third piece is multi-chain support. So we want to be as chain agnostic as possible. Of course, it needs to be EVM compatible, so it makes it easier. That's where we would start. But making USDS and SPA available across whatever preferred chain you want to use, I think is going to be valuable. And so, for example, if you want to be able to make transactions on Arbitrum, but then you want to hold it for a long period of time, say, you know what, multiple years because you're a holder, then you may want to transfer your assets over to Ethereum, for example, and hold it there just, you know, because you feel like that may be the chain that has the longest staying power, for example. So that's the third piece that I was referring to. Nico.
Yeah, just to add like a little bit more information on what Alec mentioned. We're building a feature which in my mind will provide a lot of support towards SPA in a bear market. Specifically, it's going to be our staking mechanism that I also explained about in my previous answer. Since most of the staking rewards will be driven by the revenue generated from USDs, it means that as SPA price drops, the same amount of revenue will be able to buy back more SPA from the open market, effectively making staking returns counter-cyclical. So when the more the price of SPA goes down, the higher the APY of staking SPA is going to be, and that APY is going to be driven organically through the buybacks. So it's not that we'll be giving more SPA directly to the people, it's that the same revenue will be able to buy back more SPA that will be distributed directly to the people. So as long as USDS has steady demand, which we believe that by giving a steady yield and being a stable coin will have a steady demand, even if the crypto market has a downturn, we will be producing consistent revenue to buy back SPA, which means that the lower the price of SPA, the more SPA we'll be buying back, the higher the APY for staking SPA. So that counter-cyclical APY is going to be a key mechanism that will absorb a lot of the selling pressure during the bear market.
Thank you. That's really informative. Following question is about the ability to spend yield on debit cards, a terrific way to use USDs. Is this something you're considering in the future? Are you collaborating on this with any prospective third-party partners? Alec, would you like to take this one?
Yeah, it's definitely something that is in our roadmap. We're not in any active talks yet. We need to focus on just making USDS a little bit more liquid and available in the market prior to allowing or prioritizing allowing spending of that through a debit card. Plus, we haven't really figured out some of the regulatory barriers yet. So it's in our roadmap, but likely closer to the end of Q2, most likely.
Okay. What do you expect to get from so many AMAs, and what are goals with the community? Do you consider the community to be a fundamental role in the project? Yeah, obviously. So we will let you engage our communities in not only the product update side, but also in the decision process, making process in the future as much as possible. So we definitely consider the community to be a rudimental factor in the project. That is why we're going to launch the governance protocol very soon.
Yeah, just to build on that, so Sperax, very soon is going to be a non-privileged member in this ecosystem. What that means is, we don't have any special privileges compared to any other SPA holder. So, of course, we view the community as a fundamental component here. You guys are the governors. So we're one of many, basically like politicians, but we're not the ultimate governor or the final decision maker. We need to, consult all SPA holders, and we all need to work together to grow this protocol to ensure it's decentralized, censorship resistant, and overall successful.
Yeah, great answer. Following question is actually about Lifted. Thank you for bringing this up. I think Lifted is kind of on a side project at the moment. We did notice there's a discrepancy of general rules in the blockchain ecosystem, and we would like to address it within our capability. However, it's just out of our bandwidth at the moment to keep developing that project, but it's definitely in our pipeline, and hopefully we can re-engage the potential female applicants in this initiative in the future. But thank you for asking this question. Allison, following question regarding what motivated you to make a dual token system? What scope does it give you to have a dual token system, USDS and SPA?
I can try answering that. So first of all, the dual token system is a clear way to have a value accrual mechanism for the stablecoin, so that the SPA token directly captures all the growth from USDs. So we thought that system makes a lot of sense when it comes to basic tokenomics. Effectively, you create some really deflationary dynamics if you link a hopefully successful stablecoin product growth with the deflation of a utility token. So that was the first reason we decided to go forward with this model. The second reason, which is also the same, it's the different side of the same coin, is the benefits that it gives you when it comes to stabilization. So you can think of SPA as the token that the supply of SPA absorbs all the price volatility of USDs. So it's a way to make sure that the protocol can always stay solvent and be able to redeem or mint $1 worth of cryptocurrencies for one USDs. So effectively, what do I mean when I say that SPA absorbs all the volatility of USDS price? I mean that whenever the price of USDS is less than $1, there is a direct arbitrage incentive that will lead to the supply of SPA growing. And whenever the price of USDS is more than $1, again, there is a direct arbitrage incentive to decrease the supply of SPA. So effectively, we built a mechanism where we can convert all the price volatility of one token to the supply volatility of the other token, therefore ensuring that the system stays solvent and stable, even if we don't have 100% collateral.
Following question is from Harsha. On the website, it expressed Sperax holders have the right to governance within the ecosystem. Will the users have to pay a membership fee before giving their votes and opinions? What are the requirements that the user have to meet so that the Sperax team can take into account and consider these opinions? I think he's referring to the Best Buy governance protocol.
Well, I can start by saying, we actually pay you to participate. If you're thinking deeply on strategy and contributing to the protocol and you stake your capital, we'll actually pay you to participate in governance. So no, we don't collect any membership fees. You just have to acquire SPA. Then you stake it to indicate that you're a governor in the protocol. And at that point, you participate in key decision-making through the governance process, which will explain more as we finalize that experience for the governors. But then once you stake, you'll be earning additional SPA from a couple different sources, including protocol fees, and then just a inflation reward plus some of the auto yield that is generated from USDS, as Nico mentioned. So you'll be paid to govern.
Got it.
Yeah, and
okay.
everyone will be able. Everyone that has more than a threshold of SPA will be able to submit proposals, and everyone will be able to vote on proposals. So effectively, each key decision will be determined by the SPA stakers. So as soon as our DAO is out, each and every key decision of the protocol will be determined via people who stake their SPA. And as Alex said, we're going to be a non-privileged entity in that ecosystem. Effectively, we're going to have the same say as everyone else, proportional to the SPA holdings we have.
Okay. Following question, I did notice there's a quite amount of questions related to our blockchain and also other factors of the project. At this point, forgive me, I'd like to enforce some centralized manner to filter some of the questions, and we can only focus on the DeFi and stablecoin component for the rest of the time of the AMA, since we're kind of in a tight schedule. So I think we can following consider which question. Let me take a look. Arsha has a following question. Considering that USDS is a decentralized currency, how can we keep it packed one at one with USD? In other words, what makes USDS have such stability, and what are its advantages over other decentralized stablecoins like DAI? Nico?
Sorry, could you repeat the question, please?
Yeah, sure. How do you keep USDS packed as one versus one with USD, and what makes it so stable? What is the advantages over DAI?
Yeah. So it's a hybrid stablecoin. It means USDS derives stability from the collateral it has, as well as by its implicit backing via governance token SPA. Effectively, what that means is that USDS allows users at any given point in time to mint or redeem one USDS for $1 worth of cryptocurrencies. What the hybrid model does is that it tells the system that in a period of stress or in a period where there is not enough available capital, the protocol will still be solvent and just mint some SPA to ensure redemptions. So effectively, the algo component is what allows SPA to be stable, even if the even if the value of the collateral changes. That's on the downside. On the upside, what that means is that as more more USDS is being minted, more SPA tokens have to be burned. So effectively, unlike DAI, that allows USDS to grow in a much more scalable manner. We have a lot of partnerships planned for the next few weeks. So, for instance, the fact that that we can back USDS also with SPA is an easy way for us to use some of the SPA that the foundation has to bootstrap USDS circulating supply. That's something that we wouldn't be able to do if it was 100% backed stablecoin. So the scalability that this model gives us is, I would say, the main benefit relative to the purely crypto-backed model like DAI.
Okay, thank you. Following question is from the Alchemist. Hi, old friend. Are we planning on joining the Curve wars, as we're a stablecoin protocol and Curve being a platform to drive liquidity for stablecoins? It could be a good investment to incentivize the pool, therefore getting new eyes on the project. Once people get to know Sperax and they understand the auto yield component, I'm sure they will see the benefit, and this will create a growing growth of demand. Even if it was a short-term play to drive growth, I actually see USDS having a snowball effect. Once you hold it and get a yield, why would you want to hold any other stablecoin? Yeah, that's the question. Anyone would like to take it? Alec, would you like to take this one about war?
Could you repeat it? Sorry, I cut out a little bit.
Basically, the question is, are we planning on joining the Curve war?
Okay, so right now, we're not really sure, and what we're doing is preparing like we want to be a significant player in the Curve wars. And what I mean by that is right now we're collecting CRV emissions, and it's being kept in a protocol multi-sig. So we basically have the option today that if we were, interested in participating in the Curve wars, we already have a nice little reserve of CRV ready to become a significant player, but we're not married to the idea that we must reserve CRV. We will be prioritizing auto yield. So in the event that it's returning less than the target of 11%, we will be selling CRV in order to prioritize the auto yield rate of 11%. So I hope that answers the question.
Got it. Okay. Next question is about USDS roadmap. I'm looking forward to seeing it on more chains instead of Arbitrum only and other exchanges. Could you share some of your plans in the future, including more features, listing exchanges, more fiat on-ramp partners, deflation mechanism, updated products? Yeah, anyone would like to take this one?
The multi-chain question. So definitely it's on our roadmap. Actually, it's one of my biggest priorities is to make sure that we have a roadmap and a architecture that will work cross-chain. Now that depends also on our partners. So we have to make sure that we can transfer. What we'd like to do is to have our token, our stablecoin native on each chain, and that poses some technical problems. So two things. One is the ability to transfer our token cross-chain is one issue, and also communication. In the case of, for example, voting perspectives. So if you take your SPA on one chain and I have staked my SPA on a different chain, we would still be able to, one, get the rewards, and also two, be able to vote on proposals. Nico, Alec, you guys want to cover the other topics?
I can address the fiat on-ramp real fast. I mean, so our current provider Transact is actually an aggregator, so it actually pulls from many different partners. So we won't be needing an additional fiat on-ramp partner. And I can't remember the other components of the question, sorry.
Yeah, like more features of the USDS, more listing exchanges, deflation mechanism, other products.
The deflation mechanism, we talked about exchanges. We're in talks with many exchanges. Our key objective is to get direct to Arbitrum withdrawals. So we're talking with major exchanges that have that unlocked, including getting that feature unlocked for SPA on FTX. And then we're also trying to get USDS integrated as a trading pair as well into both centralized and decentralized exchanges. And yeah, I think that's everything.
Cool. Next question is from Sandro. Do you have any NFT plans in the roadmap? Also, do you have any passive income options and incentivization rewards for a long-term holder? We currently don't have any NFT plans like in the near future, at least in this year, but it's something really interesting to be integrated.
And yeah, when it comes to
Go ahead.
passive
Sorry,
income, when it comes to passive income, I think we have covered that. USDS generates passive income just by holding it. SPA will generate a steady source of passive income by staking it as soon as we release our V model, which is going to be early in April. So yeah, both tokens actually have sustainable source can be sustainable sources of passive income just by holding them and staking for SPA.
Got it. Okay. Follow-on question still from Sandro. What will be the strategies to attract new non-crypto users? So basically, we are after receiving some capital investment from our investors, we are exponentially expanded on our physical event sponsorship and also our online advertisement to target some not less so crypto native users, so we can reach a wider audience in our targeting throughout those platforms. Yeah. Following question is about interoperability. What is the latest with the USDS cross-chain development and interoperability? Ray has already covered that, but Ray, do you have anything else to add or not?
No, not much more. I mean, that is, like I said, it is on our roadmap. It is a major focus of our efforts, and we're looking to build the right strategy and architecture for it. Because, like I said, we would like to have our token native on each chain, and that creates different challenges that you don't get if you have a wrapped token and have your token native on only one chain. But we want to make it native on all the chains as possible.
Mm-hmm. Yeah. Next question is about TVL. How do all of you have any strategy to keep TVL keep going up and more increasing? I think I mentioned at the beginning of the AMA that we first of all we through organic growth and external partners. But Nicolas might have something else to add.
Yeah, the key long-term value proposition we're making is that most of like being a yield-bearing stablecoin gives us the benefit of being able to subsidize adoption without diluting our governance token. So we can subsidize adoption in a more sustainable manner. So effectively, our goal is to have steady growth of our TVL rather than having really volatile TVL. Effectively, we we give the users the yield that can be generated organically on DeFi as a subsidy just by holding USDs. And we plan to integrate that feature within smart contracts as well. So we think the value proposition of a yield-bearing stablecoin is going to be significant within DeFi, in borrowing and lending applications, when it comes to getting leverage, when it comes to being a liquidity provider. So we think the characteristic of a stablecoin gives us a significant comparative advantage. So I think when we allow the yield-bearing aspect the yield to be distributed in smart contracts, we will see some rapid growth of USDs.
Right. Next question is about collateralization of USDs. And you plan to introduce BTC, ETH, or some other cryptocurrency as collaterals?
Yes, we will be adding more decentralized stablecoins as well as some major cryptocurrencies like Ethereum and Bitcoin. We will do it in a gradual manner. We will start first with decentralized stables and then with Ethereum and Bitcoin. So yeah, the answer is yes. The protocol can already accommodate volatile assets. We just wanted to be cautious and do things a bit more slowly to make sure that there won't be any risk to the stability of the system.
Got it. Okay. Next question is about the competitive advantages of algo stablecoin over crypto and fiat-backed stablecoin. I think we've covered that and also quite general knowledge. So probably not gonna spend time answering that question. And next question, I think is quite popular, is about the circulation. Today, there is $25 million in USDs in circulation and 10 mil SPA tokens burned. According to that, there's monthly need for minting 1 to 5 mil USDs to make that in balance. What is doing the team to be a successful project and not die in the middle with the tokenomics, a lot of self-pressure every month?
So I don't quite understand the question, but I think I understand the concern. So the specific phrasing of the question confuses me a bit. What does it mean to make the balance? Like under what's the constraint there? I don't quite understand it, but I can answer the concern more generally. So it's true that right now only a small amount of the circulating supply has been released. The vast majority of emissions are actually funds that will be going to the treasury. So that's going to be the number one receiver of new SPA tokens, and treasury funds will be determined 100% via DAO. The second biggest receiver of future SPA emissions is going to be the foundation. And the reason we do that is because we need to have some SPA emissions, some flexibility to be able to get new partnerships. I understand how that can be a concern for some, because if we were to release in the open market directly all the new SPA tokens, this could cause significant selling pressure. But we actually plan to be pretty strategic in the way we're going to do it. Specifically, keep in mind that to mint $1 worth of USDs, someone has to commit 7 cents worth of SPA at the moment, 7.5 cents worth of SPA. So one of the main mechanisms we will be driving USDs adoption is to give some incentives to people to mint new USDs. So let's say by giving like a 7% discount on minting USDs, which would be by us covering the SPA component. So we plan to utilize a lot of those SPA tokens to just mint more USDs. So many of the SPA tokens that the foundation, most of the SPA tokens that the foundation will receive will be used to mint USDs rather than dumped in the open market. And foundation and treasury account for 70-80% of future emissions. When it comes to the team members, we all changed our vesting schedule. This information has been released to the public, so we delayed our vesting schedule to 2 years. So we won't be getting any SPA tokens in the near future. And on top of that, the other things we'll be doing to make sure that tokenomics work is the introduction of the staking of our staking mechanism and the V model. Effectively, we're going to set up the incentives such a big amount of the circulating supply of SPA to be staked. And I can assure you that many of our early investors have verbally committed to stake the big fraction of their SPA tokens. So effectively, many of the new emissions will just be getting directly staked, and the amount of emissions that won't be staked will mostly go to the treasury that will be controlled via DAO, or to the foundation that will be used as to subsidize future growth and adoption of USDs by minting more USDS tokens. So overall, I think that should answer most of the concerns that people have with when it comes to the yearly inflation. Oh, and one last thing I wanted to mention is that total supply has been steadily going down. So yes, circulating supply is increasing because more tokens are vesting over time, but total supply keeps going down as more USDS tokens are being minted. So eventually, this model will be highly, highly deflationary as USDS grows.
Got it. Thank you. Following question also from Zodiac Wizard. Any top one tier exchange coming? Alec, any info that you can share? You can share with the community?
Nothing concrete yet, so I'm going to pause on that.
Okay, no worries. Next question. With the supply ultimately expanding to 5 billion and with only 0.2% of this being burned so far, how is the price of XPA going to appreciate? At $10, the fully diluted market cap will be 50 billion. With this sort of numbers, it's hard to understand the value proposition.
I hate talking about specific prices. I won't set a target or say it will go to $1, $5. Like that's something that does not directly interest me. When it comes to addressing the concerns of for future emissions, I did my best to explain why, in my view, that's not a big issue. The vast majority of new emissions will go to the treasury. Treasury is going to be an entity that will be controlled via SPA stakers. So in theory, they could just decide to burn all of those SPA if they wish. It's SPA that we won't have access to. And the foundation SPA is something we will be using to get more adoptions. And the main way we're going to use it is to incentivize minting USDS on discount. So overall, I think this answers like most of the concerns. Team vesting has been extended, so no team member is going to be receiving SPA tokens for 2 years. And from our investors, there hasn't been significant selling pressure as of now. And they have verbally committed, at least the two biggest investors of ours have verbally committed that they will stake their SPA, most of their SPA. So
Okay.
overall, I hope that addresses some concerns.
Okay, thank you. Following question would be so Zodiac said, why the GitHub progress seems stopped? The work in the project is backstage or what?
I'm sorry, progress in what, Frida?
He says the GitHub progress seems to be stopped or halted. Is the work in the project in backstage?
So I'm not sure which project this person is referring to. What we have done is we've cleaned up some of the old projects that we had and taken them, removed them. So it doesn't give the impression that we're not actively working. We are very much actively working on the repos that we have. They're not public yet because we're still making changes, and we want to make sure that we present something that's more stable in terms of code changes, because we're constantly making updates and improving upon what we have. Not to say that it's not stable, it's just that we are very much active on those GitHubs, and so we don't. I don't feel comfortable making those public yet, but we will do that soon.
Got it. Thank you. Next question is about variable losses in providing liquidity. So if the SPA burns out when more USDS tokens are in circulation, it results in a larger SPA token price and irreversible loss as the price ratio of the token pair to deposit time will change. Is there a model of how it will impact yield farmers? I'm not exactly sure if I understand this question.
Yeah, so I think the underlying assumption is that if the price of SPA changes, there's going to be some permanent loss for liquidity providers. But I truly hope liquidity providers are aware of that. Like, that's a risk you always take when you're a liquidity provider. So effectively, you just have to make a bet whether the fees and emissions you will be capturing will offset the price change. Think of it as effectively betting whether volatility will go up or down. If you think volatility in the market won't increase, it makes sense to do that. If you think volatility will go up, usually being a liquidity provider is not the best choice. Yeah, we don't know how the market will evolve, so it's not something we can directly guess. We just offer good enough incentives for people with different risk preferences to take the deal. We don't make a stance on whether volatility will go up or down, or whether the price will go up or down. We just give incentives that we think should be good for a variety of users to offset that risk and make them provide liquidity.
Thank you. Next question is about how to increase the demand for USDs.
Yeah, I'll take that. So, I mean, as we've mentioned a couple different times today, so we have like 3 different ways in which we do that. One is through like auto yield and the savings experience. So we're using, fiat on-ramps to make that super accessible and super easy for, just general savers. 2, we're working with external partners. So we're prioritizing getting USDS listed on various decentralized and centralized exchanges. We're integrating with DeFi protocols. So we're soon going to be able to settle things like perpetual trades on Tracer and GMX in USDS. And then we're also building, getting listed on protocols like Vesta, so you can take loans against our assets. And then 3rd, we're building our own custom products. So we're going to unlock new functionality to redirect things like auto yield to enable a whole suite of investment strategies that are under the capital protected umbrella. So again, we're going to make it extremely easy to access auto yield for savings accounts. We're going to be integrating with DeFi protocols, and we're going to be building our own features and apps that utilize USDS. And this is all on the notion of increasing demand for the auto yield stablecoin.
Great, thank you. Next question is more about marketing and community. Now there's a DAO trend. Is it possible for you to create a Spartan DAO or something similar? Yeah, I mean, we are creating our own DAO for the Sperax protocol. However, if there's something that is really demanded by the community to create their own DAO, it's totally up to the community, it's up to the Spartans. Will there? Yeah, Alex.
Yeah, just worth noting, there's going to be one official DAO. There's going to be many sub-communities, which they're already kind of coming about, different trading groups and stuff like that. But the official governance process is going to happen through one DAO, and to participate, you stake your SPA.
Will there be any activities for users, meme contests and quizzes? Yeah, they're all coming in the pipeline. We do have determined on Spartan as a community name, and we are sourcing some illustrators to create a mascot for us. So stay tuned. Any kind of activity you would like to see from your community? Yeah, we'll probably launch some contests regarding tweets, articles, and videos. That will definitely be something we're interested in.
Yeah, and a quick addition there. So, as we've been talking, our primary objective here as a community is to grow the circulating supply of USDS and kind of, allow more people to gain access to this cool new financial instrument. So as a community, just help us spread the word and, participate in the Discord, help us identify partners that, maybe are a really great candidate to receive potential USDS incentives or SPA incentives for integrating USDS into their protocol. So, help us kind of grow. And there's both grants for the partner and grants for community members that can help us grow the USDS TVL.
yeah, hopefully we can launch our own bounty in the near future, so we can engage more talents out there.
Yeah, and if you have an idea now before the bounty program is live, go check out our bio on Twitter. You can actually apply today for SPA grants in order to grow USDS TVL. So we're very excited to work with community members and partners to help grow demand for USDS.
Great. Pretty much the one last question. Right now, if we want to get a USDS, we have to mint it with SPA and other collaterals. If we're able to get USDS from Transact, how will the minting process be? Which collateral will it have?
They're actually a user who is using Transact to acquire USDS won't be responsible for providing any collateral. All they have to do is link their credit card or their bank account, and then USDS will be automatically airdropped into their wallet of choice. So they wouldn't have to do any sort of minting or anything themselves. That all gets done on the back end.
Very nice. Super user friendly. I think that is pretty much all of the questions. If I think we're just hit the time mark, so I would like to invite Nico, Alec, and Ray to pick your favorite question. Each person can pick only one, so we can pick up the winners to award.
So yeah, I didn't quite understand the question the way it was phrased, but I definitely understood the concerns of that question. Therefore, I'll pick Zodiac Wizard and the question about circulating supply. I think the phrasing could have been better, but the concerns are definitely valid.
Got it. Okay.
I like the question about the roadmap, both from not only technical roadmap, but also economic roadmap that we're developing. Things about the questions about also like our GitHub and our product roadmap on that. We published the source code of our contracts, so those are available to look at for anybody who wants to be able to inspect our smart contracts. So that's available. So I like that question.
Okay. Alec?
Yeah, 1 second. I'm going through these. I'll pick the one that I just answered, the one pertaining to the experience purchasing USDS through Transact. So I don't know how to say his name. Pochoklo? I don't know.
Yeah, I guess so. Okay, cool. That will be it. We'll conclude the AMA, the community check-in today, and we'll see you next week. Bye, guys.
Thanks, everyone.
Bye-bye.
Thanks, y'all.
Thank you. Bye-bye.